Let's get ready for the Arizona real estate exam with 100 questions on state-specific laws, principles, practice, and more. And don't miss what's happening in the bottom corner. It'll be key to your prep. We'll tell you how in a minute. Now let's get started.
Arizona Real Estate Law and Practice. Arizona Department of Real Estate, ADRE. What is the primary function of the Arizona Department of Real Estate? Is it A, to license and regulate real estate professionals in Arizona? B, to provide loans to homebuyers? C, to appraise property values? Or D, to design real estate courses? The answer is A, to license and regulate real estate professionals in Arizona. The Arizona Department of Real Estate regulates and oversees real estate professionals' licensing and ensures compliance with Arizona state laws and regulations. Which of the following educational activities is the Arizona Department of Real Estate involved in? Is it A, providing continuing education for licensed real estate agents? B, teaching real estate courses directly to students? C, publishing real estate textbooks? Or D, hosting public seminars on investment strategies? The answer is A, providing continuing education for licensed real estate agents. The Arizona Department of Real Estate ensures that licensed real estate professionals meet their mandatory continuing education (CE) requirements, overseeing and approving the education that providers deliver.
Have you noticed the code in the bottom corner? Next time you're stumped, take that code to birdsey.ai for immediate help and a free study session with Birdsey, your personal AI study partner. Plus, you'll get access to hundreds of additional questions, helping you move closer to passing your exam with confidence. The next time you're feeling unsure or stuck, give it a try.
Which of the following is not a responsibility of the ADRE? Is it A, investigating complaints against real estate agents? B, issuing administrative orders and penalties? C, providing direct legal representation to consumers? Or D, approving real estate education courses? The answer is C, providing direct legal representation to consumers. The ADRE does not offer direct legal representation to consumers. Its primary role is to regulate the industry, investigate complaints, and enforce real estate laws. What type of disciplinary action can the Arizona Department of Real Estate take against a licensee found guilty of a major violation? Is it A, issuing a formal warning? B, suspending the license? C, awarding monetary compensation to affected parties? Or D, offering a probation period? The answer is B, suspending the license. The Arizona Department of Real Estate has the authority to suspend a license if a licensee is found guilty of a major violation. This enforcement is aimed at upholding industry standards and protecting the public. Arizona real estate licensing laws and regulations. What is the minimum age requirement to obtain a real estate salesperson license in Arizona? Is it A, 18 years old, B, 21 years old, C, 25 years old, or D, 30 years old? The answer is A, 18 years old. Arizona requires applicants for a real estate salesperson license to be at least 18 years old. This ensures that individuals are legally considered adults before they can practice real estate. What is the required passing score for the Arizona real estate salesperson exam? Is it A, 60%, B, 70%, C, 75%, or D, 80%? The answer is C, 75%. The Arizona real estate salesperson exam requires a passing score of 75%. This ensures that candidates have a comprehensive understanding of real estate laws and practices. How many hours of continuing education are required every 2 years for license renewal in Arizona? Is it A, 12 hours, B, 18 hours, C. 24 hours, or D. 30 hours? The answer is C. 24 hours. Arizona mandates that real estate licensees complete 24 hours of continuing education every 2 years to renew their licenses, ensuring they stay current with real estate laws and practices. Which of the following is not required to obtain a real estate salesperson license in Arizona? Is it A, a high school diploma or equivalent? B, completion of 90 hours of pre-licensing education? C, passing a state examination? Or D, prior real estate experience? The answer is D, prior real estate experience. To obtain a real estate salesperson license in Arizona, candidates must have a high school diploma or equivalent, complete 90 hours of pre-licensing education, and pass a state examination. Prior real estate experience is not required. What entity is responsible for issuing real estate licenses in Arizona? Is it A, Arizona Real Estate Commission? B, Arizona Housing Authority? C, Arizona Department of Real Estate? Or D, Arizona Real Estate Board? The answer is C, Arizona Department of Real Estate. The Arizona Department of Real Estate is responsible for issuing and regulating real estate licenses in Arizona, as well as enforcing license laws and regulations. What is the pre-license education requirement for an Arizona real estate salesperson? Is it A, 40 hours of approved real estate education? B, 90 hours of approved real estate education? C, 120 hours of approved real estate education? Or D, 60 hours of approved real estate education? The answer is B, 90 hours of approved real estate education. Arizona requires 90 hours of approved pre-licensing education for real estate salesperson applicants, which covers essential topics as determined by the Arizona Department of Real Estate. Fair housing laws in Arizona. What key legislation requires accessibility features in newly constructed multifamily dwellings? Is it A, Fair Housing Act Amendments of 1988? B, Civil Rights Act of 1964? C, Americans with Disabilities Act, ADA? Or D, Housing and Urban Development Act of 1965? The answer is A, Fair Housing Act Amendments of 1988. The Fair Housing Act Amendments of 1988 expanded the scope of the Fair Housing Act to include protections for people with disabilities, including mandatory accessibility features in new multifamily dwellings. What is the purpose of the Arizona Residential Landlord and Tenant Act? Is it A, to regulate fair housing practices? B, to provide rules for real estate transactions? C, to provide a legal framework for rental agreements and tenant rights? Or D, to enforce zoning laws in Arizona? The answer is C, to provide a legal framework for rental agreements and tenant rights. The Arizona Residential Landlord and Tenant Act establishes and protects the legal rights and responsibilities of both landlords and tenants within Arizona, promoting fair and equitable rental practices. Under Arizona law, which group is protected from housing discrimination? Is it A, pet owners? B, people over the age of 55? C, people with high incomes? Or D, people with insufficient credit history? The answer is B, people over the age of 55. Arizona's fair housing laws, in alignment with federal regulations, provide protections for certain groups, including individuals above the age of 55 in age-restricted communities. How must a landlord in Arizona respond to allegations of housing discrimination? Is it A, ignore the allegations if they believe them to be false? B, cooperate with investigations and provide necessary documentation? C, evict the tenant making the complaint? Or D, offer the tenant a reduced rent to withdraw their complaint? The answer is B, cooperate with investigations and provide necessary documentation. Landlords in Arizona must cooperate fully with fair housing investigations. Ignoring complaints, retaliating, or offering incentives to withdraw complaints are all illegal practices under fair housing laws. What entity enforces fair housing laws within Arizona? Is it A, Arizona Department of Real Estate, B, Housing and Urban Development, C, Arizona State Legislature, or D, Federal Reserve? The answer is B, Housing and Urban Development, HUD. Fair housing laws in Arizona are enforced by the U.S. Department of Housing and Urban Development, which investigates complaints and ensures compliance with federal fair housing regulations. Which organization in Arizona is responsible for enforcing HUD's fair housing laws at the state level? Is it A, Arizona Department of Housing, B, Arizona Real Estate Department, C, Arizona Attorney General's Office, or D, Arizona Housing Authority? The answer is C, Arizona Attorney General's Office. The Arizona Attorney General's Office is responsible for the enforcement of fair housing laws in the state, ensuring compliance with both state and federal regulations. What actions are prohibited under the Arizona Fair Housing Act concerning renting or selling a property? Is it A, refusing to rent based on credit history, B, providing different terms of sale based on race, C, refusing pets due to allergies, or D, denying tenancy based on income? The answer is B, providing different terms of sale based on race. The Arizona Fair Housing Act prohibits discrimination based on race, color, religion, sex, handicap, familial status, or national origin in the sale or rental of housing.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsey.
Real estate contracts in Arizona. If a contract is signed under duress in Arizona, what is its status? Is it A, valid, B, void, C, voidable, or D? The answer is C, voidable. A contract signed under duress in Arizona is voidable, meaning the affected party can choose to either fulfill or void the contract. Mutual consent is essential for a valid contract. Which of the following is true about earnest money deposits in Arizona real estate transactions? Is it A, they must be a fixed amount for all transactions, B, they are refunded to the buyer if the contract is canceled due to seller default, C, they cannot be applied toward the purchase price, or D, they are held by the buyer's agent? The answer is B, they are refunded to the buyer if the contract is canceled due to seller default. In Arizona, if the seller defaults, the earnest money is refunded to the buyer. Earnest money serves to bind the contract and usually is held by an escrow company or broker. In Arizona, when must a listing agreement be in writing to be enforceable? Is it A, it does not need to be in writing, B, only if the property value exceeds $100,000, C, within 5 business days of a verbal agreement, or D, always for any enforceable listing agreement? The answer is D, always for any enforceable listing agreement. Real estate listing agreements in Arizona must be in writing and signed by all parties to be enforceable. This ensures clarity and reduces potential disputes. What does the Arizona purchase contract's inspection period entail? Is it A, 15 business days for the buyer to inspect the property, B, 5 calendar days for the buyer to hire a professional inspector, C, 10 calendar days for the buyer to complete all inspections, or D, 20 calendar days for the buyer to negotiate repairs? The answer is C, 10 calendar days for the buyer to complete all inspections. In Arizona, the buyer generally has a 10-day inspection period to perform all necessary inspections of the property. This period should be used to discover defects and request repairs or other considerations. In Arizona, how long does a buyer have to terminate the contract if the seller fails to provide the seller's property disclosure statement, SPDS? Is it A, 5 days, B, 10 days, C, 3 days, or D, 5 days after the specified delivery period for SPDS? The answer is D, 5 days after the specified delivery period for SPDS. According to Arizona real estate law, if the SPDS is not provided, the buyer has 5 days after the specified delivery period to terminate the contract. What is the legal consequence if a real estate contract in Arizona is not in writing? Is it A, the contract remains enforceable, B, the contract is considered voidable, C, the contract is void, or D, the contract is valid if both parties agree? The answer is C, the contract is void. Arizona's statute of frauds requires that real estate contracts must be in writing to be enforceable. If not in writing, the contract is void. Disclosures required by Arizona law. Which of the following is a required disclosure when selling property in Arizona? Is it A, the presence of any lead-based paint, B, the presence of personal property like furniture, C, the seller's reason for moving, or D, the color of interior walls? The answer is A, the presence of any lead-based paint. Arizona law requires sellers to disclose the presence of lead-based paint in properties built before 1978 as a health and safety measure. What is the purpose of the Property Disclosure Report, SPDS, in Arizona? Is it A, to inform potential buyers about the financial history of the seller, B, to protect buyers by providing detailed information about the property's condition, C, to list all previous owners of the property, or D, to ensure the property meets all local zoning laws? The answer is B, to protect buyers by providing detailed information about the property's condition. The SPDS is used to provide prospective buyers with detailed disclosures about the property's condition, helping buyers make an informed purchase. Which of the following must be disclosed regarding environmental hazards on a property in Arizona? Is it A, the presence of any underground storage tanks, B, the average utility bills for the last 2 years, C, the age of all appliances, or D, the school district the property is located in? The answer is A, the presence of any underground storage tanks. Disclosure of underground storage tanks is required as they can have significant environmental impacts, including soil and water contamination. When must an Arizona seller disclose known material facts about the property? Is it A, at the closing of the sale, B, within 30 days after the contract is signed, C, prior to accepting an offer, or D, after the inspections are completed? The answer is C, prior to accepting an offer. In Arizona, sellers must disclose any known material facts about the property to potential buyers before an offer is made and accepted to ensure informed decision-making. Which of the following is required to be disclosed related to the property's location in an Arizona transaction? Is it A, if the property is located in a designated floodplain, B, the proximity to the nearest grocery store, C, the neighborhood crime rate, or D, the name of the previous owners? The answer is A, if the property is located in a designated floodplain. Properties located within floodplains are subject to specific risks and potential insurance requirements, making this a necessary disclosure under Arizona law. Which document must an Arizona seller provide to disclose any material defects the property may have? Is it A, title report, B, property disclosure report, C, mortgage statement, or D, homeowners association statement? The answer is B, property disclosure report. Arizona law requires sellers to provide the property disclosure report to disclose any known material defects to potential buyers. When selling a home, which watershed area disclosure is mandatory in Arizona? Is it A, floodplain disclosure, B, earthquake hazard disclosure, C, radon gas disclosure, or D, tornado zone disclosure? The answer is A, floodplain disclosure. Arizona requires sellers to disclose if the property is located within a floodplain, as this can significantly impact the risk of flooding.
Don't forget to comment below with your tips, challenges, and thoughts on exam preparation. Your experiences can make a big difference for others.
Transfer of title in Arizona. Which form of deed is most commonly used to transfer real estate in Arizona? Is it A, quitclaim deed, B, general warranty deed, C, special warranty deed, or D, bargain and sale deed? The answer is C, special warranty deed. In Arizona, the special warranty deed is the most commonly utilized form in real estate transactions, as it limits the grantor's liability to their period of ownership, providing some level of protection to the buyer. Which legal concept ensures that a buyer in Arizona receives a title that is free from liens or encumbrances except for those disclosed at the sale? Is it A, adverse possession, B, title insurance, C, eminent domain, or D, The answer is B, title insurance. Title insurance is crucial in Arizona real estate transactions as it provides assurance and protection to the buyer against any undisclosed encumbrances or liens, ensuring a clear and marketable title. To make a deed valid in Arizona, it must include which of the following elements? Is it A, signatures of the grantee, B, grantor's signature, C, witness signatures, or D, recording at the county recorder's office? The answer is B, grantor's signature. For a deed to be valid in Arizona, it must include the grantor's signature. Other essential elements include the names of the grantor and grantee, a sufficient description of the property, and an expression of the grantor's intent to convey the property. What is the primary purpose of the Arizona Affidavit of Property Value? Is it A, to provide a record of property value for tax assessment purposes, B, to ensure the property complies with zoning regulations, C, to verify the buyer's financial ability to purchase the property, or D, to confirm the transfer of title to the county recorder? The answer is A, to provide a record of property value for tax assessment purposes. The Affidavit of Property Value in Arizona is primarily used to provide accurate records of property transactions, ensuring proper tax assessment. It includes information such as sale price and property description. In Arizona, what is the statutory requirement for a deed to provide constructive notice? Is it A, notarization of the deed, B, recording the deed at the county recorder's office, C, paying property transfer taxes, or D, obtaining a title insurance policy? The answer is B, recording the deed at the county recorder's office. Constructive notice in Arizona is provided by recording the deed at the county recorder's office. This process makes the transaction a matter of public record, informing all interested parties of the transfer. Which type of deed provides the least amount of protection to the buyer in Arizona? Is it A, general warranty deed, B, special warranty deed, C, quitclaim deed, or D, bargain and sale deed? The answer is C, quitclaim deed. In Arizona, a quitclaim deed transfers the seller's interest in the property without any warranties or guarantees about the title's integrity, providing the least protection to the buyer. What must be done for a deed to be recorded in Arizona? Is it A, it must be notarized, B, it must be witnessed by two people, C, it must include a property survey, or D, it must be approved by the county assessor? The answer is A. It must be notarized. In Arizona, deeds must be notarized to ensure the authenticity of the signatures before they can be submitted for public recording, providing constructive notice to third parties. Earnest money and escrow in Arizona. What is the purpose of earnest money in an Arizona real estate transaction? Is it A. It acts as a guarantee that the buyer will obtain financing? B. It serves as a financial deposit to show the buyer's true interest in the property? C. It covers the buyer's closing costs? Or D. It pays for the initial appraisal of the property? The answer is B. It serves as a financial deposit to show the buyer's true interest in the property. In Arizona, earnest money is a deposit made by the buyer to show their genuine interest in the property. It is held in escrow and may be applied to the purchase price upon closing. Who is typically responsible for handling the earnest money in an Arizona real estate transaction? Is it A. The listing agent, B. An escrow company or attorney, C. The home seller, or D. The buyer's lender? The answer is B. An escrow company or attorney. In Arizona, earnest money is typically handled by an escrow company or attorney who holds the money in an escrow account until the transaction closes or is otherwise resolved. What happens to the earnest money if the buyer defaults on the contract in Arizona? Is it A. The buyer gets a full refund, B. The earnest money is forfeited to the seller, C. It is automatically applied to the buyer's closing costs, or D. The amount is split between the buyer and the seller? The answer is B. The earnest money is forfeited to the seller. If the buyer defaults on the real estate contract in Arizona, the earnest money deposit is typically forfeited to the seller as compensation for taking the property off the market and to cover any potential damages. How is earnest money typically treated if a real estate contract is terminated according to its contingency clauses in Arizona? Is it A. The earnest money is forfeited to the seller, B. The earnest money is returned to the buyer, C. The earnest money is divided between the seller and the escrow agent, or D. The earnest money is used to cover the real estate agent's commission? The answer is B. The earnest money is returned to the buyer. In Arizona, if a real estate contract is terminated according to its contingency clauses, e.g. inspection, financing, or appraisal contingencies, the earnest money is generally returned to the buyer. What must be done with earnest money funds under Arizona law? Is it A. They must be deposited into the seller's personal bank account, B. They must be deposited into a federally insured escrow account, C. They must be held in cash by the buyer, or D. They must be deposited into the real estate agent's business account? The answer is B. They must be deposited into a federally insured escrow account. Arizona law requires that earnest money be deposited into a federally insured escrow account. This ensures the funds are handled properly and are protected throughout the transaction process. In Arizona, how long must a broker maintain records of earnest money deposits? Is it A. 3 years, B. 5 years, C. 7 years, or D. 10 years? The answer is B. 5 years. According to the Arizona Department of Real Estate, brokers must maintain records of earnest money deposits for a minimum of 5 years. Who is responsible for ensuring that the earnest money deposit is placed into escrow within the prescribed time frame in Arizona? Is it A. The seller, B. The escrow agent, C. The buyer's agent, or D. The title company? The answer is C. The buyer's agent. In Arizona, it is the responsibility of the buyer's agent to ensure that the earnest money is deposited into escrow within the time frame specified in the purchase contract. Arizona real estate taxes. What is the primary purpose of property taxes in Arizona? Is it A, to fund federal government operations, B, to support private real estate developers, C, to fund state and local government services, or D, to pay for property insurance? The answer is C, to fund state and local government services. Property taxes in Arizona are used to support state and local government services, such as education, transportation, and emergency services, not federal operations or private developers. How is the assessed value of a property in Arizona typically determined? Is it A, based on the property's purchase price, B, through a physical appraisal by a tax assessor, C, by multiplying the market value by the city's tax rate, or D, through random sampling of nearby properties? The answer is B, through a physical appraisal by a tax assessor. In Arizona, property assessors determine assessed value through physical appraisals and by evaluating the market value and condition of the property, not simply the purchase price or random sampling. When are property taxes due in Arizona? Is it A, once annually on January 1st, B, twice a year on October 1st and March 1st, C, quarterly on the first day of each quarter, or D, annually on April 15th? The answer is B, twice a year on October 1st and March 1st. In Arizona, property taxes are due semi-annually, with payments typically required on October 1st and March 1st, aligning with the state's tax cycle. What is the state rate for transaction privilege tax on real estate sales in Arizona? Is it A, 5.6%, B, 4.5%, C, 6.6%, or D, 3.75%? The answer is C, 6.6%. Arizona charges a 6.6% transaction privilege tax on the gross proceeds from real estate sales, which is effectively the state's sales tax applied to transactions. What type of property typically receives the largest assessment ratio reduction under Arizona tax law? Is it A, commercial properties, B, residential properties, C, industrial properties, or D, agricultural properties? The answer is B, residential properties. Under Arizona law, residential properties often have a lower assessment ratio in comparison to commercial or industrial properties, benefiting from reduced property tax obligations. How are property taxes in Arizona typically calculated? Is it A, based on the market value of the property, B, on the rental income generated by the property, C, based on the assessed value times the tax rate, or D, on the replacement cost of the property? The answer is C, based on the assessed value times the tax rate. Property taxes in Arizona are calculated based on the property's assessed value multiplied by the tax rate. The assessed value is typically a percentage of the market value set by the county assessor. What is the role of the county assessor in Arizona's property tax system? Is it A, to levy property taxes, B, to assess the value of properties for tax purposes, C, to collect property tax payments, or D, to determine the property tax rate? The answer is B, to assess the value of properties for tax purposes. The county assessor in Arizona is responsible for determining the assessed value of each property within the county, which is then used to calculate property taxes.
Notice the code in the corner? When you're stumped by a question, enter it at birdsey.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
Arizona real estate finance. Loan fundamentals. What is the primary purpose of a mortgage in real estate finance? Is it A, to secure a loan using the property as collateral, B, to determine property tax rates, C, to transfer ownership from seller to buyer, or D, to insure the property against hazards? The answer is A, to secure a loan using the property as collateral. A mortgage is used to secure a loan using the property as collateral. It allows the lender to foreclose if the borrower defaults. What type of loan is insured by the Federal Housing Administration, FHA? Is it A, conventional loan, B, jumbo loan, C, Federal Housing Administration, FHA loan, or D, Veterans Affairs VA loan? The answer is C, Federal Housing Administration, FHA loan. FHA loans are insured by the Federal Housing Administration to protect lenders against borrower default. What does a deed in lieu of foreclosure imply in Arizona real estate finance? Is it A, the borrower sells the property to a third party, B, the borrower voluntarily transfers property ownership to the lender to avoid foreclosure, C, the lender forgives the loan without any conditions, or D, the borrower refinances the loan with better terms? The answer is B, the borrower voluntarily transfers property ownership to the lender to avoid foreclosure. A deed in lieu of foreclosure is when a borrower voluntarily transfers property to the lender to avoid the foreclosure process. What is the function of an amortization schedule in a real estate loan? Is it A, to show the breakdown of monthly mortgage payments over time, B, to provide a list of closing costs for the transaction, C, to analyze the creditworthiness of the borrower, or D, to determine the property's market value? The answer is A, to show the breakdown of monthly mortgage payments over time. An amortization schedule shows the breakdown of each loan payment, illustrating how much goes towards interest and principal reduction over the loan term. Which entity typically issues a promissory note in real estate finance? Is it A, the buyer, B, the seller, C, the lender, or D, the real estate agent? The answer is A, the buyer. In real estate finance, the buyer-borrower issues a promissory note as a written promise to repay the loan under specified terms. What is a wraparound mortgage in Arizona real estate finance? Is it A, a mortgage that wraps around the original loan and encompasses new financing, B, a mortgage offered exclusively for first-time homebuyers, C, a mortgage used to pay off entirely the existing mortgage, or D, a mortgage that requires mandatory mortgage insurance? The answer is A, a mortgage that wraps around the original loan and encompasses new financing. A wraparound mortgage in Arizona real estate finance involves a new mortgage that wraps around an existing one, allowing the borrower to make a single payment for both loans. Which of the following is true about a due-on-sale clause in Arizona real estate loans? Is it A, it requires full repayment of the loan if the property is sold without lender approval, B, it requires partial repayment of the loan if the property is refinanced, C, it allows automatic loan assumption by the new buyer, or D, it permits loan modification upon transfer of ownership without lender involvement? The answer is A, it requires full repayment of the loan if the property is sold without lender approval. A due-on-sale clause requires that the full outstanding loan balance be repaid if the property is sold without the lender's approval, protecting the lender's interest in the property. Loan types. Which type of loan is typically insured by a government agency and requires a lower down payment? Is it A, conventional loan, B, Federal Housing Administration, FHA loan, C, Veterans Affairs VA loan, or D, United States Department of Agriculture, USDA loan? The answer is B, Federal Housing Administration, FHA loan. FHA loans are insured by the Federal Housing Administration and typically require a lower down payment compared to conventional loans. This makes them accessible to more homebuyers who may not have significant savings. Which loan type is exclusively available to eligible veterans and often does not require any down payment? Is it A, conventional loan, B, Federal Housing Administration, FHA loan, C, Veterans Affairs, VA loan, or D, United States Department of Agriculture, USDA loan? The answer is C, Veterans Affairs, VA loan. VA loans are guaranteed by the Department of Veterans Affairs and are exclusive to eligible veterans and service members. They often require no down payment, making homeownership more accessible for those who qualify. Which type of loan is not backed by any government agency and is based on the borrower's creditworthiness? Is it A, conventional loan, B, Federal Housing Administration, FHA loan, C, Veterans Affairs, VA loan, or D, United States Department of Agriculture, USDA loan? The answer is A, conventional loan. Conventional loans are not insured or guaranteed by any government agency. They are provided by private lenders and are based on the borrower's creditworthiness, often requiring higher credit scores and larger down payments. A loan that is guaranteed by the Department of Veterans Affairs is known as which type of loan? Is it A, conventional loan, B, Federal Housing Administration, FHA loan, C, Veterans Affairs, VA loan, or D, United States Department of Agriculture, USDA loan? The answer is C, Veterans Affairs, VA loan. VA loans are guaranteed by the Department of Veterans Affairs. They are designed to help veterans, service members, and eligible surviving spouses obtain home financing with favorable terms, including no down payment. Which type of loan program offers financing options in rural areas and is backed by the United States Department of Agriculture? Is it A, conventional loan, B, Federal Housing Administration, FHA loan, C, Veterans Affairs, VA loan, or D, United States Department of Agriculture, USDA loan? The answer is D, United States Department of Agriculture, USDA loan. USDA loans are backed by the United States Department of Agriculture and are targeted specifically at rural property buyers. They often offer attractive terms, such as zero down payment, to promote homeownership in rural areas. What is the primary benefit of a VA loan for eligible borrowers? Is it A, low interest rates, B, no down payment required, C, assistance for closing costs, or D, lower closing costs? The answer is B, no down payment required. One of the primary benefits of VA loans is that they do not require a down payment, making homeownership more accessible for eligible veterans. Which loan type typically has the strictest eligibility requirements and the highest credit score standards? Is it A, conventional loans, B, Federal Housing Administration, FHA loans, C, Veterans Affairs, VA loans, or D, United States Department of Agriculture, USDA loans? The answer is A, conventional loans. Conventional loans are not backed by government agencies, and thus lenders impose stricter eligibility and credit score standards to mitigate risk. Loan qualifications. Which of the following is not considered when evaluating a loan application in Arizona? Is it A, credit score, B, debt-to-income ratio, C, employment history, or D, marital status? The answer is D, marital status. Lenders in Arizona evaluate a borrower's creditworthiness based on criteria like credit score, debt-to-income ratio, and employment history. Marital status, however, is not a permissible factor as per the Equal Credit Opportunity Act, ECOA. What is the primary purpose of the loan estimate form in Arizona real estate transactions? Is it A, to provide an estimate of closing costs, B, to finalize the loan agreement, C, to provide tax information, or D, to verify employment history? The answer is A, to provide an estimate of closing costs. The loan estimate form is required by the Truth in Lending Act TILA, and the Real Estate Settlement Procedures Act, RESPA. It provides borrowers with an early, transparent summary of key loan terms and closing costs. What role does the Fair Credit Reporting Act, FCRA, play in Arizona real estate loan qualifications? Is it A, it sets interest rates for loans? B, it ensures the accuracy of credit reports used in loan applications? C, it governs the assessment value of the property? Or D, it provides guidelines for mortgage insurance? The answer is B, it ensures the accuracy of credit reports used in loan applications. The Fair Credit Reporting Act, FCRA, is crucial in ensuring that the data used in credit reports is accurate and private, influencing loan qualification decisions. Lenders rely on these reports to assess borrower credibility. Which document details the final terms of a loan agreement in Arizona real estate transactions? Is it A, loan estimate, B, closing disclosure, C, purchase agreement, or D, appraisal report? The answer is B, closing disclosure. The closing disclosure form, mandated by the CFPB, provides the borrower with the final terms and costs associated with the mortgage loan. This document must be reviewed before closing the real estate transaction. In Arizona, what is the purpose of the debt-to-income DTI ratio in the loan qualification process? Is it A, to determine the maximum loan amount, B, to assess the borrower's ability to repay the loan, C, to evaluate the borrower's credit history, or D, to establish the loan's interest rate? The answer is B, to assess the borrower's ability to repay the loan. The debt-to-income DTI ratio is essential in the loan qualification process. It demonstrates a borrower's ability to manage their existing debts and monthly payments relative to their income, influencing their loan eligibility. What is the maximum allowable debt-to-income DTI ratio for most conventional loans in Arizona? Is it A, 30%, B, 36%, C, 43%, or D, 50%? The answer is C, 43%. For most conventional loans, the maximum debt-to-income DTI ratio is 43%. This ratio helps lenders determine the borrower's ability to manage monthly payments. It is an important qualification metric. Which of the following factors is primarily considered to determine a borrower's ability to repay a loan in Arizona? Is it A, credit score, B, employment history, C, number of dependents, or D, property location? The answer is A, credit score. A borrower's credit score is a key indicator of their ability to repay a loan. It reflects their credit history and reliability, essential in risk assessment by lenders. The loan application process. What information is required on a loan application to verify the borrower's identity? Is it A, social security number, B, passport number, C, driver's license number, or D, voter registration number? The answer is A, social security number. A social security number is required to verify the borrower's identity and credit history. This is a standard requirement in the loan application process to ensure accurate assessment. What is the purpose of the loan estimate form in the loan application process? Is it A, to estimate the property value, B, to provide information about loan costs and terms, C, to confirm employment status, or D, to verify the title status of the property? The answer is B, to provide information about loan costs and terms. The loan estimate form provides detailed information about the costs, fees, and terms of a loan. It's crucial for borrowers to understand these details before committing to the loan. Which document is used to prove the borrower's income during the loan application process? Is it A, credit report, B, C, appraisal report, or D, title insurance? The answer is B, tax Tax returns are typically used to verify a borrower's income. Lenders require this documentation to assess the borrower's ability to repay the loan. Why do lenders check a borrower's debt-to-income ratio, DTI? Is it A, to determine the property value, B, to assess the borrower's ability to repay the loan, C, to verify employment history, or D, to check credit score accuracy? The answer is B, to assess the borrower's ability to repay the loan. Lenders check the borrower's DTI ratio to evaluate their ability to handle new debt payments along with existing obligations. It is a crucial metric in the loan approval process. What does the Uniform Residential Loan Application primarily gather? Is it A, detailed information about the loan officers, B, comprehensive details about the borrower, C, market analysis of real estate trends, or D, summarized property tax records? The answer is B, comprehensive details about the borrower. The URLA collects comprehensive details about the borrower, including personal, financial, and employment information. This standardized form is crucial in the residential loan application process. What must a borrower include in the loan application to demonstrate their employment history? Is it A, bank statements, B, W-2 forms, C, credit report, or D, tax returns? The answer is B, W-2 forms. W-2 forms are required in the loan application process to verify a borrower's employment history by detailing earnings from their job, which lenders use to assess employment stability. Which section of the Uniform Residential Loan Application, URLA, collects information on a borrower's monthly income and combined housing expense information? Is it A, Section 1, type of mortgage and terms of loan, B, Section VUE, monthly income and combined housing expense information, C, Section 3, borrower information, or D, Section 7, declarations? The answer is B, Section 5, monthly income and combined housing expense information. Section 5 of the URLA is specifically designed to collect the borrower's monthly income and combined housing expense information, crucial for lenders to assess the affordability of the loan. Underwriting for Arizona real estate. What is the primary role of an underwriter in the context of Arizona real estate finance? Is it A, to determine the market value of the property, B, to verify the borrower's eligibility and risk for a loan, C, to negotiate the loan terms with the borrower, or D, to handle the legal ownership transfer process? The answer is B, to verify the borrower's eligibility and risk for a loan. Underwriters in Arizona real estate finance evaluate the borrower's creditworthiness and risk before issuing a loan, ensuring compliance with lending criteria and legal guidelines. Which financial metric is most crucial for underwriters when evaluating a borrower for a real estate loan in Arizona? Is it A, debt-to-income DTI ratio, B, property tax rate, C, current market value, or D, loan term? The answer is A, debt-to-income ratio. Arizona underwriters focus on the borrower's debt-to-income ratio to assess financial stability. It's critical for determining the borrower's capacity to repay the loan. In Arizona, what document typically contains detailed information about a borrower's income, assets, and liabilities for underwriting purposes? Is it A, credit report, B, loan application, C, property appraisal, or D, deed of trust? The answer is B, loan application. The Uniform Residential Loan Application is essential for underwriters in Arizona as it provides comprehensive financial details about the borrower, crucial for loan approval decisions. What factor is not typically considered by Arizona underwriters when assessing a real estate loan application? Is it A, borrower's credit score, B, employment verification, C, neighborhood crime rates, or D, borrower's debt obligations? The answer is C, neighborhood crime rates. Underwriters in Arizona focus on the borrower's financial health and creditworthiness, not the crime rates of neighborhoods, which are more relevant to the property's marketability. Which of the following best describes the term loan-to-value (LTV) ratio in the context of Arizona real estate underwriting? Is it A, ratio of the loan amount to the property's market value, B, ratio of annual income to loan amount, C, future value of the property post-loan, or D, the interest rate of the loan? The answer is A, ratio of the loan amount to the property's market value. The loan-to-value (LTV) ratio in Arizona real estate underwriting measures the loan amount relative to the property's current market value, helping underwriters assess risk. What is a primary consideration for underwriters assessing a borrower's capacity to repay a real estate loan in Arizona? Is it A, credit score, B, debt-to-income ratio, C, property appraisal, or D, loan term? The answer is B, debt-to-income ratio. Underwriters in Arizona prioritize the debt-to-income (DTI) ratio to gauge a borrower's ability to manage mortgage repayments alongside their existing debt. ADRE guidelines emphasize this metric in underwriting. Why is an appraisal report crucial in Arizona real estate underwriting? Is it A, to assess borrower's creditworthiness, B, to determine property eligibility for financing, C, to verify borrower's income, or D, to set interest rates? The answer is B, to determine property eligibility for financing. An appraisal report is essential in Arizona underwriting as it verifies that the property's value justifies the loan amount, ensuring the lender is making a sound investment. ADRE regulations mandate this for securing real estate loans. Loan closing. What is the main purpose of a closing statement in an Arizona real estate transaction? Is it A, to verify the loan approval status, B, to provide a detailed accounting of the transaction, C, to update property zoning classifications, or D, to execute the transfer of title? The answer is B, to provide a detailed accounting of the transaction. The closing statement itemizes all the costs associated with the transaction, including details like loan fees, property taxes, insurance, and title fees. It's an essential document for both buyers and sellers to understand their financial obligations. Which party typically pays for the title insurance in an Arizona real estate transaction? Is it A, the buyer, B, the seller, C, the real estate agent, or D, the lender? The answer is B, the seller. In Arizona, it is customary for the seller to pay for the owner's title insurance premium, which protects the buyer if ownership disputes arise. The buyer, however, often pays for the lender's title insurance policy. What role does the escrow agent play in an Arizona real estate transaction? Is it A, acts as the lender in the transaction, B, mediates disputes between buyer and seller, C, ensures that all transaction conditions are met before closing, or D, sets the interest rates for the loan? The answer is C, ensures that all transaction conditions are met before closing. The escrow agent plays a neutral role, ensuring all contract conditions are satisfied, managing funds and documents, and coordinating the final steps to successfully close the transaction. Which document outlines the final agreement between the buyer and seller and is presented at closing? Is it A, purchase agreement, B, closing disclosure, C, title report, or D, loan estimate? The answer is B, closing disclosure. The closing disclosure is a key document provided to both the buyer and the seller that details all costs incurred in the transaction, ensuring transparency and agreement on the financial terms before closing. In Arizona, which party is responsible for recording the deed after closing? Is it A, the buyer, B, the seller, C, the real estate agent, or D, the escrow or title company? The answer is D, the escrow or title company. After closing, the escrow or title company records the deed with the county recorder's office, ensuring the buyer's ownership is legally documented and public records are updated accordingly. Which document serves as evidence that a mortgage has been paid off and the lien on the property has been released? Is it A, title insurance policy, B, promissory note, C, satisfaction of mortgage, or D, deed of trust? The answer is C, satisfaction of mortgage. The satisfaction of mortgage document is filed with the county recorder to show that the mortgage has been fully paid off, releasing the lien on the property. During a real estate closing in Arizona, who is typically responsible for ensuring the proper transfer of funds? Is it A, real estate agent, B, buyer, C, escrow agent, or D, lender? The answer is C, escrow agent. The escrow agent facilitates the proper transfer of funds between parties in a real estate transaction, ensuring all terms of the sale are met before dispersing funds. Arizona mortgage disclosure requirements. What must be included in the good faith estimate, GFE, provided to an Arizona mortgage applicant? Is it A, monthly property tax estimates, B, projected loan repayment schedules, C, itemized list of expected fees, or D, credit score disclosures? The answer is C, itemized list of expected fees. The good faith estimate in Arizona includes an itemized list of expected loan-related fees to help borrowers understand the costs of their mortgage. When must the Arizona mortgage loan disclosure statement be delivered to the borrower? Is it A, within 3 business days of receiving the loan application, B, at closing, C, within 24 hours of receiving the loan application, or D, 1 week before closing? The answer is A, within 3 business days of receiving the loan application. Arizona law requires that the mortgage loan disclosure statement be delivered to the borrower within 3 business days of receiving the loan application. Which document must Arizona lenders provide that outlines the terms and conditions of the mortgage in detail? Is it A, truth in lending disclosure, B, fair housing disclosure, C, escrow agreement, or D, flood hazard disclosure? The answer is A, truth in lending disclosure. The truth in lending disclosure must be provided and outlines key terms like interest rates, payment schedules, and total costs to ensure borrowers understand their mortgage. Under Arizona law, how long must mortgage brokers retain records of disclosures provided to borrowers? Is it A, 3 years, B, 5 years, C, 1 year, or D, 10 years? The answer is A, 3 years. Arizona law specifies that mortgage brokers retain records of all disclosures provided to borrowers for a minimum of 3 years for compliance and auditing purposes. What key information does the Arizona mortgage loan disclosure statement include? Is it A, projected income of the borrower, B, APR and finance charges, C, employer details of the borrower, or D, borrower's credit history? The answer is B, APR and finance charges. The Arizona mortgage loan disclosure statement includes key information, including the annual percentage rate, APR, and total finance charges to ensure transparency for the borrower. What information must be included in the truth in lending disclosure statement provided to an Arizona mortgage applicant? Is it A, APR, total interest paid in loan terms, B, property appraisal value, C, borrower's employment history, or D, amount of property taxes? The answer is A, APR, total interest paid in loan terms. The truth in lending disclosure statement contains the APR, total interest paid, and loan terms to provide complete transparency about the costs associated with the mortgage. Under Arizona law, what is the deadline for delivering the closing disclosure to a borrower before the closing of a mortgage? Is it A, at least 3 business days before closing? B, at least 7 business days before closing? C, on the day of closing? Or D, within 24 hours before closing? The answer is A, at least 3 business days before closing. To ensure borrowers have enough time to review their loan terms and costs, the closing disclosure must be delivered at least 3 business days before closing.
Thanks for joining us today. If you found this video helpful, subscribe to our channel for more practice exams, tips, and tricks. And don't forget to visit birdsey.ai for complimentary study sessions with Birdsey, your AI-powered study partner.